Hello everyone, welcome to today's training session, and we will cover in this session basic concepts regarding fixed assets. I am Peer Khurram Rashdi, I am Microsoft certified trainer, and we will start the series on the functional topic. Already we have done many videos on the functional topics. So fixed asset is also a very integral part of financial accounting, and we will cover how to do fixed assets in Dynamics 365 Finance and Operation. So first of all, we'll just need to know about basic concepts, and then we will start with various transactions involving fixed assets that depends upon acquisitions, depreciations, and disposal. So the topics or the concepts which are important regarding the basic concepts in a fixed asset are books, then fixed asset groups, depreciation profiles, fixed asset parameters, and posting profiles. Each of the concept is very important when you work in fixed asset module in Dynamics 365, and definitely that is also each of the concept map with a financial accounting needs in order to do the whole life cycle of a fixed asset. So to understand more what are the relationship among fixed asset components, so there is at the top, on the left hand side you can see fixed asset parameters, which are basically for just like any of other module, any of the other financial module or supply chain module in Dynamics 365, fixed asset parameters are very important. So first of all, the settings are defined on the parameters page for each of the module, and then the settings are defined on the group level, and this is almost to all the financial modules. Like if you talk about accounts payable, so there are accounts payable parameters, and then there are vendor groups. Similarly, account receivable, there are account receivable parameters, and then there are account receivable, there are customer groups. So the settings are initially defined there. Some of the settings which are copied to individual record, like a fixed asset itself. Here we talk about few of the settings which are defined already on the fixed asset groups are then copied to the fixed assets. And books are also important part of a fixed asset specifically, and books can relate to a fixed asset group as well. And then within the books there are depreciation profiles, which are also important concept. Fixed asset also include a single book or maybe multiple books, and then there are posting profiles, which are basically we will define it what are the posting profiles, but they are very important when we talk about the transactions regarding fixed assets. And then posting profiles are linked to the journal ledger. So first of all, we need to define a fixed asset book, and what we mean by a book. It is not a general book, but it is just a financial book. Financial book in order to keep track about a fixed asset during its whole life cycle. So maybe a fixed asset is having a 1 year life or more than 1 year life, like 5 year or 10 year, whatever it is. Throughout what are various values, it will keep track about those values. So it can also have like you can see on the right hand side the screen of fixed asset books in D365, and here you can see there are various books which are defined here, and within the books there are depreciation profile defined. You can see and there are also various settings which you can define on a book level. So then there can be multiple books assigned to a fixed asset. So then it is mentioned that books can be configured to post associated transaction to the GL. This configuration is default setting because it's typically used for corporate financial reporting. But there are certain books which do not post to GL module, but only keeps it itself to only subledger, that is fixed asset subledger, and that is used for tax reporting purposes, for government purposes. Like state to state, there are different regulation when you talk about a fixed asset. Not only to state wise but federal level also, there can be a different regulations when you talk about tax purposes. So you need to keep the value as per the local laws. So you can define as many as books as you like, but only there can be one book which can be configured to post transactions to GL. So the other books are only for reporting purpose. You can take reports, and you can take reports for the value of that fixed asset. What is the current net book value as per that book, that specific book. So then we come to an important concept of fixed asset groups. Just like as I mentioned in initial of this video, that groups are in order not only to categorize or group fixed asset, but also to define various settings which are then defaulted or copied to a individual fixed asset. Once you create a fixed asset within a fixed asset group, so it allows you to group various assets, and then also default properties or attributes for each of the assets once you define that asset within that group. So then books can also be assigned to fixed asset group, and then once fixed assets are assigned to a group when they are created, and by default the books that are assigned to asset groups are assigned to fixed assets. So that will be very easy task. I mean, instead of defining to each of the fixed asset separate book, you just define the book within a fixed asset group, and automatically once you define a fixed asset within that group, the books will automatically be copied to that fixed asset. So this will make your life easy. So then there are depreciation profiles, and the accountants which work within fixed asset domain, they already know about this. What are the various depreciation approaches when you talk about a fixed asset? So that must be defined, and before you can define a book, because within the book you need to define a depreciation profile. So how the value of asset is depreciated over a period of time, or over the for example over a certain criteria, like you talk about transportation, so a certain mileage is covered, so that asset is depreciated as per its consumption or use of kilometers, how many kilometers it has covered. So you must define the method of depreciation and also the depreciation years. Depreciation year, that can be a calendar year or can be a fiscal year. So calendar year is definitely an actual year, and fiscal year is based upon the periods how you define it as per the regulation of that legal entity. And also the frequency of depreciation, how many time you need to depreciate that asset. So as you can see on the right hand side of the screen, period frequency is defined as a monthly, depreciation year is as calendar, and method is straight line service life. So normally it is used straight line service life, and it is a uniform method. So these are various depreciation calculation methods which we can define within a depreciation profile, and that covers almost all the depreciation methods which are available today. Straight line service life and reducing balance are most common, which are 1 and 2, and then there can be manual, factor, consumption, straight line life remaining, and then 200% reducing balance, 175% of reducing balance. Basically 7 to 10, these are all variations of the second approach, or second depreciation calculation method, that is called reducing balance, but only a percentage of percentage variation is there. So we will define straight line service life. First of all, this is an accounting concept. So what it defines, that a straight line method is used. The asset's depreciation cost is spread evenly over an estimated useful life of an asset. So what is an useful life of an asset? That is estimated by the accountants. That is an expected life of an asset, that how long it will remain in service. So for example, there can be an asset which can remain up to 5 years. There can be an asset like a laptop can be for 2 years or something like that. It depends upon company to company or legal entity to legal entity. So in a straight line is basically based on the assumption that it will be on the passage of time. The depreciation will occur over the passage of time. So how you will calculate the depreciation expense. So each period depreciation expense will be computed by dividing the depreciable cost, that is cost less than estimated residual value, by the number of accounting periods in the asset's estimated useful life. So at the bottom you can see the formula in which you can see the depreciation expense will be the cost of asset, that is on the price on which it is purchased, including the landed cost or including the cost to set up that specific asset, minus the residual value, that is or the last value you want to keep for that asset, and it will divide by the estimated useful life. So as per this formula, you can see at the bottom that, for example, an asset is purchased on a value of $20,000 and the residual value is $2,000. So the $18,000 will be then divided by 5 years if the useful life is estimated useful life is 5 years. So $18,000 divided by 5 will become $3,600 per year depreciation expense. So you need to have an estimated cost of that asset over the useful life. So here is a chart which will furthermore explain about the scenario. For example, on the date of purchase, the cost was 20,000. This is the same example. Like you cannot reduce more than 2,000 threshold capitalization threshold value, or it is also called residual value. So here you can see on the right hand side the last value is 20,000, and these are basically net book values or carrying values. So on the left hand side, on the date of purchase, the actual cost is $20,000, and once the first year is completed, you can see 3,600 as per previous formula, which was 20,000 minus 2,000 and divide by 5 years. So this will be 3,600 per year. So each year the same amount will be reduced from the cost. So we have put 3,600 for each of the year and end of the year, and then accumulated depreciation is just a balance of the total depreciation so far. So on the first year, end of first year 3,600, then end of second year will be 3,600 is added, the left annual depreciation value to the previous value, so it will become 7,200. And on the right hand side you can see the net book value. So the cost is 20,000, so minus 3,600 will be 16,400 will be the net book value. Similarly, on the end of second year, 7,200 will be accumulated depreciation, and 3,600 will be further reduced from 16,400, so it will become 12,800, and so on, until the residual value of $2,000 is remaining, because it cannot reduce more than that. So that is defined in the fixed asset parameters for all the assets. So for a depreciation to post, we need to have two accounts. One is a depreciation expense account or P&L account, and the other one is a balance sheet account called accumulated depreciation. So this will be the total depreciation will be 18,000. So at any point of time, if you minus or subtract the accumulated depreciation from the cost, you will get the net book value, that is a carrying value in the last column. So this is how the straight line service life happens. So in the reducing balance, it is called also accelerated method of depreciation, because in certain assets, so it is considered industrially or when they are in operations, that initially when you purchase an asset, its production is at its peak, means it's totally 100% efficient, but as soon as it reaches to end of its service life, so its efficiency is reduced substantially. That's why reducing balance, which initially depreciate it basically, and then at the end it reduces its lesser than in its initial service life. So with this method, depreciation is computed by applying a fixed rate to the declining carrying value of a long-term asset. It therefore results in higher depreciation charges in early years of the asset life, though any fixed rate can be used. The most common rate is a percentage equal to twice the straight line depreciation percentage. When this rate is used, the method is usually called the double reducing balance method. So here you can see annual depreciation rate, how it is calculated, percent of useful life, and then divide by estimated useful life. So initially it will be for example 100% useful life, and 5 years for example is the service life of an asset. So once you divide 100 by 5, so it will become 20%, and in double declining balance depreciation rate, it is basically double, so 2 multiplied by 20%, so it will become 40%. So in the chart, if we can understand here that the cost is same 20,000 USD, and when we calculate a double declining or reducing balance method, so here you can see at the end of first year, 40%, that is the double percent of the reducing balance is applied to the actual cost. So it will become 8,000 the annual depreciation cost. So the accumulated depreciation at at the end of first year will be 8,000, and it will be reduced by the cost, which will become net book value of 12,000. Similarly, on the end of second year, so the 40% will not be applied by the actual cost, rather than remaining balance of that asset. So the remaining balance is at the last column, that is 12,000. So 12,000 will be multiplied by 40%, and it will become 4,800. So on the second year, you can see it is lesser value than $8,000. So that's why the depreciation expense has reduced on the end of second year. So definitely then once you add 4,800 to 8,000, so accumulated depreciation will become 12,800, and once you subtract this from the actual cost, it will become the net book value, that is 7,200. So the end of third year will be again 40% multiply by 7,200, and that expense will become, the depreciation expense will become $2,880, and accumulated, it will be added to the previous accumulated depreciation and will become 15,680. So in this way, this will be subtracted from the cost to become the net book value of 4,320, and so on until it reaches up to this value of 592. Why this 592 here instead of a formula? Because the threshold, capitalization threshold, or the residual value cannot be less than $2,000. So at the end of fourth year, 17,408 was the accumulated depreciation. So definitely, if you minus this from 20,000, so net book value is $2,592. So we can only depreciate this further by the value of 592, because 2,000 need to be a residual value. So that's why this 592 without any formula. So this is the way of reducing balance, how this is calculated. So after this, we can see here on the right hand side, you can see the screenshot of fixed asset parameter form, where you can define the basic settings or the, like for example, capitalization threshold, which will be applicable to the assets. Like here it is defined 1000, whatever the base currency is, in this case maybe USD, and similarly there are various other settings which are defined. So basically capitalization threshold is determines the assets that are depreciated. If a purchase line is selected as a fixed asset but it does not meet the specified capitalization threshold, the fixed asset is still created or updated, but the calculate depreciation option is set to no. Why? Because it is less than the capitalization threshold, so no need of depreciation if the amount of purchase is lesser than that. So that's why it will not be depreciated when you create a depreciation proposal. Later on we will see about this. And on the purchase order fast tab, you can configure how assets are created as part of purchasing process. First option is named allow asset acquisition from purchasing. So these and other settings are normally defined in the parameters form, and where you can here in this fast tab of purchase order, you can see that option. If you set this option to yes, asset acquisition occurs when the invoice is posted. If you set this option to no, you can still put a fixed asset on a purchase order and invoice, but the acquisition won't be posted. So what is basically acquisition? For the new learners, acquisition is nothing but a value which is posted to the asset account as a part of the cost of that asset initially. So that is called an acquisition. When you post a debit value to the asset account, and credit can go to the maybe in case of inventory, if it is already inventory and you are removing the fixed asset from inventory and marking it as a fixed asset, so it will become credit. Otherwise bank can be credit. So in this way you can post an acquisition. Acquisition is nothing, you are just introducing a value of asset to the fixed asset module and also booking the value into ledger. So next concept is very important, which is called the posting profiles. Posting profiles is not new for fixed asset, but rather for each of the module, like accounts payable or account receivable, you will find posting profiles. Similarly in inventory also posting profiles. Posting profiles basically serve to integrate or to serve as a bridge to a ledger, a sub ledger to a ledger. So in this case fixed asset is a sub ledger, so this posting profile will help you to connect this sub ledger of fixed asset to a ledger. So what I mean by ledger, that in this case you can see on the right hand side screen there are certain main accounts which are defined as a fixed asset posting profiles, and on the top you can see a lookup called acquisition. In the acquisition, these main accounts defined are used as an asset account when you post an acquisition journal. So these accounts will be hit, so these accounts will be debited and offset will go to the credit. This credit will go to the offset account. So here you can also define the types of fixed asset transaction that are posted to each of the main account. So what are the types you can define at this lookup? Like it is showing acquisition. If you pull this lookup, so you will see other transaction types as well, and then the settings can be changed in that. You can create various combination of main accounts for fixed assets depending on the level of detail that you want for a fixed asset in a GL. So we can see this in actual posting profile form, that what we mean by level of details. Basically these are for example in a table or group or all level, here you can define and the combinations. So main accounts can be based on the transaction types, books and other main accounts. So These main accounts are based on the transaction type, that is here can be acquisition, can be depreciation, can be based on the book which is defined here, and can be based on the other main accounts. So that's it, and we will just I will demo a little brief about the module itself. In D365 interface, you can go to the fixed asset module here, and similarly like other modules, you can see there are workspaces like fixed asset management workspace, where a role which is involving a fixed asset module will be doing its frequently performed jobs. And then there are data entry forms like fixed assets and fixed asset not acquired, and sold or scrapped. So then there are journal entries or transactions where you can post fixed asset journals, acquisition proposal, depreciation proposal, and if you want to make an inventory item to a fixed asset item. Similarly, there are portions where you can post budget journals or budget register entries, and then there are many reports available to see your fixed asset transactions and balances and whatever you like. Then there are certain periodic tasks if you want to mass update or mass transfer or reclassify your fixed asset. And then there are setup which we have just seen in our presentation. We can see here, like for example, fixed asset groups, fixed asset posting profile, there are books which are available, depreciation profile, and fixed asset parameters. These are all we have covered already, and additionally there are other workflows, setups, and asset reasons, multiple things. So we'll just explore one by one. Like if I go to fixed asset parameters, you can see here there are various settings available as we have seen in the screenshot, and you can see here in the purchase order fast tab, you can see allow asset acquisition from purchasing. This option is available if you want to acquire an asset from a purchase order, and you can unselect or switch it off, so there will be no acquisition posted by using the purchasing method. Okay, and then a specific group can be defined which basically allows only acquisition posting. That is a user group, and then there are various other settings, and you can check it one by one. So these are basically, and this is minimum depreciation amount that is used. You cannot reduce more than that. So this is basically a residual value, and there are capitalization threshold amount, and there are various number sequences like fixed asset number sequence is available, and then this is about asset maintenance. Okay, then we'll go to the depreciation profiles, where we will define the approach on which it will be reducing the service life. So here you can see methods are various, as we have covered straight line service life and reducing balance, but there are many other methods available. Depreciation year can be fiscal or a calendar actual year. Period frequency can be yearly, monthly, quarterly, half yearly, and this is very important before you can define a book. And then we can go to the books here in the setup. Books can be basically set up within a fixed asset group or directly to a fixed asset. It is better to define it on a fixed asset group level, so that whenever you define a fixed asset within a fixed asset group, automatically that books which are defined on the group level will be defaulted or copied to that individual asset. So here you can see books are also having the names like a depreciation profile name, like here straight line life remaining depreciation profile is defined within that book. So in each book you can define a single depreciation profile and then an alternate depreciation or extraordinary depreciation. So there are various settings which you can define on a book level, And from a book you can also go to fixed asset group, so that you know that this book is defined in whatever fixed asset groups. Similarly, from the fixed asset group you can also see the books. So here you can see there are no asset group books available. But if you go to, for example, straight line service life, here you can see that these are various fixed asset group in which the same depreciation profile is defined. So land, vehicles and computers define the same SL depreciation profile. Similarly, if I go to the fixed asset groups level, here you can see, for example, if I go to the computers, you can also check here in this fixed asset group, which is basically used for grouping of various assets, plus to define various settings like a number sequence code which will be assigned to the assets under this group, and similarly what property type it has, and replacement cost factor or capitalization threshold maybe, and major type, or if you want to auto number a fixed asset or give a manual number to it. And on this fixed asset group you can also open the books which are basically defined against this group, fixed asset group. So these are various basically books which are defined against that fixed asset group. Okay, so then we will see that there are fixed asset posting profile, which we were covering and mentioning that it is serving as a bridge to integrate with the GL module. And you can see here that there this lookup is available to show you the transaction types. Like for if you click on depreciation, so different accounts are defined for depreciation. Here we define basically depreciation expense or P&L account plus an accumulated depreciation account. So you can see here, once you open, this is an accumulated depreciation tangible fixed asset, and here it is a depreciation expense account or P&L account. This accumulated is a balance sheet account, whereas this depreciation expense account is a depreciation expense account is P&L, and the accumulated depreciation is a balance sheet account. So once you add a new line, you can see the grouping here that it is defining either a table level. Once you define a table, you can directly define a fixed asset number. But if you define a group, you can pick here a fixed asset group. And once you define all, means it is applicable to individual asset as well as to a group level. And that a book combination you need to define in this one. Similarly, there are other disposal accounts also defined against this. Disposal, sale and scrap. Scrap are not defined. So if you go to depreciation adjustment, those are also similar account, and acquisition adjustment, and then acquisitions are also the same account, main account and its offset account. And then for each transaction type there are various settings defined here. So this is basically the purpose of linking a fixed asset subledger to a journal ledger. Similarly, if you go to the inquiries and reports, there are various reports available like fixed asset transaction report, and the important one I would show you is a fixed asset balances report, which you can fetch for in order to know the net book value of all the fixed asset or a particular set, or once you apply a filter to check the net book value of those fixed asset based upon how many books are defined against that asset. So for example, there is a single asset and you define 5 different books to that asset, so you will find 5 different lines having different net book value as per the depreciation profile attached to those books. So we'll just in a moment we'll see how this report looks, and this is very important and beneficial report in order to check the net book value of various assets throughout its life cycle. So how much life service life an asset has. So basically the asset value minus the accumulated depreciation value will show you the net book value. So there are various columns as well in the report which will show you various transactions, amount of various transactions throughout. So here you can see there are various assets like fixed the report has fixed asset group column, fixed asset number, and the name of the fixed asset. And there can be like, for example, initial 4 rows is showing the same asset but with different book value. One is a federal, one is a state, and similarly for different purposes. And these are tax reporting purposes, and acquisition cost is same, but the depreciation value is different in all 4 books. And then the net book value at the last is also shown differently. So in this way you can basically have a look for single asset to have a different depreciation style through its life cycle. So there are other columns as well: issue, revaluation, write up or write down, or P&L. So these are various columns, and it is contributing basically to a total net book value. This is very important report in order to have a net book value. And then you can also see many other report like fixed asset transaction report if you want to have basically transaction. Basically this is an inquiry form, and all the transaction related to an asset can be obtained here. You can also apply the filter in order to see only a single asset. So once you apply a filter, and then for example I am only interested to see this book transaction, so I will apply this filter. So I will only be checking the transaction which has occurred to the asset building number 1 and the book number 200 SLR. So this will show me all the transaction and the along with the dates and the unique vouchers. Okay, apart from this there is also a report called fixed asset listing report, and this will show you all the list of available fixed assets. There are also electronic reporting based reports available if you have already configured electronic reporting. So this is an asset listing report which is showing only the net book value along with all the basic setup like its group, asset number, name, book and posting layer, and status, whether it is open means it is acquired already, and if it is closed means it is disposed of, or not yet acquired is also mentioned, which is not yet acquired. Similarly, there are other reports which you can look into various menu items. Fixed asset statement is also an important report, and fixed asset disposal once you dispose of the fixed assets. And similarly there is one more report is called fixed asset acquisition, if you want to know the acquisition cost of the various fixed assets. And it also include the other factors like group, asset number, asset name, book and acquisition date, as well as acquisition value. So this also, if it includes a vendor account number or vendor name, so that is already also included here. So total acquisition value is also shown. So in this way you can explore the fixed asset module, which is very important for an organization, because a fixed asset is the major portion of a balance sheet. So it is very important to have a proper fixed asset records, and plus the depreciation need to be performed regularly in order to have the correct P&L and correct balance sheet. So once you depreciate your asset, definitely it will hit your P&L, and the balance sheet will contain your assets and basically accumulated depreciation cost. So that is part of a balance sheet as well. So that's it for now, and we'll cover more in future. Thank you very much and stay tuned.